Hi there, traders. This is Brad Gilbert with the Daily Market Insight for Wednesday, the 18th of May. All right, now just coming through right in the sort of middle of the Asian session here. The US retail sales, industrial production numbers, pretty good, right? Still pumping away there, sort of most of them on schedule, or if not a little bit better, especially the industrial production numbers, which were well above the forecast. So what's that done for us is put a little bit of a slow down on the whole dollar move, right? So we'll just give you a look at the some of these instruments out there. You can see the dollar index sort of steadied the ship somewhat. You'll notice that breakdown, the dollar index coincided with the break in euro. Always keep an eye on that. Those two pairs are pretty much, I mean, they work opposite, but they, with euro being sort of 58% of the basket, they do work in tandem. Gold, well, it's had a little bit of a relief rally and sort of just stalling at this stage, but oil, it doesn't seem to mind things at the moment. The US equity markets, right? So once again, we've seen a really good day. I'll show you the numbers in a second. The most of them up over 2.5%. So a little bit of to me, it's a relief rally. And what that is, there's not a huge amount of, wham, bam, thank you, ma'am, action-packed US numbers. I mean, these are good tier 1, tier 2 numbers coming out, and they show us a picture that the US economy is still going, but it's not like the knee-jerk reactions you're going to get where it's going to cause the Fed to do this or change plans. So if anything, a bit of a relief rally. Still, you'd think there'll be pressure on these equities as they slowly pop their heads up. The cryptos, well, they're not done yet, right? As I'll show you at the moment, the US equity futures through the Asian session are down, like only 0.5%, or actually 0.25 to 0.4%. There's a bit of a negative picture there on the cryptos, but with the whole euphoria around China apparently easing their COVID restrictions, the commodities are enjoying the sunshine, right? Nice bounce back. I mean, this commodity market is a blockbuster. Now, on the currencies, same sort of story as the US equities, right? You're seeing the same sort of picture. The euro, as I was saying yesterday, chance for a big short squeeze, and we've got it definitely on sterling. And this is going to be very important because we've got UK inflation numbers today, CPI, obviously very important in the whole structure of all the central banks at the moment. So you are going to be watching sterling very closely through the European session and the sterling crosses, right? Don't think for a second that your focus shouldn't go off that. It should be there. Aussie coming back to that nice resistance level around 71, and the Kiwi making hard work of around 63.5. But these currencies have bounced substantially from their low, a couple hundred points. You got to start to think if we start to keep, the US numbers keep rolling in positive, well, that US dollar trend is going to continue, and this is just a little blip on the radar. Now, as I said, the focus will be sterling. So make sure you if you're looking to trade either UK equities or sterling for that matter. If I just come across, I'm on the wrong screen. Let me just give you a look at these the data here. UK CPI, RPI. Okay, CPI being the consumer price index, RPI the retail price index. And that RPI number is just basically a more realistic basket of goods that people really buy. So it's a pretty good indication. Saying that, it's never been the big blockbuster number. But just having a look here, you keep an eye on obviously the year on year, and then you've got these core inflation numbers. But forecast 9.1%, right? And the month on month 2.6%. I mean, inflation up at these levels is, if it's not scaring you, something's going wrong. You're not sure what's really happening, because it is outrageous how high inflation's got in a lot of these places. And it's a sign to most central banks, you lose control of inflation around 6-7%. All of a sudden it's at 9% and looking likely to go higher. So this is going to be huge for the next interest rate move from the Bank of England. We get a number up around 9% or above 9.1, you could probably lock in another interest rate hike, an aggressive one, and sterling should rally. And vice versa, if we get weaker numbers here, it would take the pressure off the Bank of England, and we would see sterling dribble lower. So we're getting to a situation where every month now the inflation numbers are going to be huge, right? Huge impact across the board. You got some final inflation numbers there out of the EU, and not much coming out of the US. But once we do get into the North American session, keep an eye on dollar CAD, right? It is it's one of those numbers. There's so many things impacting sterling. Like this really strong oil price is pushing dollar CAD down. So it's a hard one because you got like three different things pulling the CAD all over the place. But just keep an eye on these numbers. Once again, inflation being the key number, 6.7% year on year, and month on month 0.5, right? So they're the big numbers there. So it's going to be important. And then get some housing building numbers out of the States. I mean, these are like a third tier number, so not like huge, but still give an indicative picture of the US economy. So today, UK CPI, Canadian CPI, plenty to play for on those currencies. But just come back and have a look at the global markets. Okay, so the US equity markets had a really good day. I don't know why I've lost some of the data there, but right at the moment in the Asian session, a little bit of a pullback from that gorgeous day they had in the North American session. So a little bit of a risk-off day, and we are seeing that on the instruments. Obviously, dollar yen, the odd one out. So the currency is behaving very well with the equity markets, right? And I've noticed whether it's just the US equity futures are giving the cryptos direction. Once again, like a risk-off day where US equity futures are lower. In Asia, we are seeing the cryptos, or most of them, drift lower there as well. Bit of a mixed bag here on commodities. Safe havens, well, not much going on there just at the moment. And the oil trade, man, if you've missed the run in oil, and I have, the one thing you can do is get prepared for, okay, when this current uptrend in oil and the oil price finishes, and that's where you can start attacking some of these things, whether it's just hitting a refinery company like Chevron, hitting dollar CAD, CAD yen, or oil itself. There's plenty to look at on that front there as well. All right, that's pretty much it, guys. So sterling and CAD. Okay, CAD crosses, sterling crosses, whatever you fancy. There's going to be plenty to look at. Inflation is the biggest number, headline number the central banks are focusing on at the moment. So make sure you keep an eye on that if you are in those sessions. Outside of that, not much else to do. All right, guys, have a good one. Cheerio.